All right, we got Apple earnings on the way. About 20 seconds here. Alex Coffey's with me in studio, senior equities contributor. I got two screens. George Tsilis is out in Salt Lake. GT, how you doing, sir? What do you think about Apple here this afternoon? We heard the case from Robert Cantwell that they're going to have a challenge ahead for them for Apple Intelligence.
Yeah, I think Robert makes some excellent points, actually. I agree with a lot of what he said. I think if you look at Apple's strategy, and we talked about this over the past couple of quarters, that overall, because their strategy is essentially to bolt on AI applications from other from other vendors. And,
that you said the magic word there, bolt on. That is a very correct and astute way to describe how they've handled AI. Let me get through the numbers here, and then we'll come back thematically to the discussion. Okay. $124.3 billion does exceed the estimate, but not by a huge amount. It kind of reminds me of Microsoft's revenue number from yesterday. Greater China, $18.5 billion, sizable miss. Also, to Robert's point there, Street was looking for 21.6, but that's not going to stop the stock. It's trying to rally to $242 right now. They're not changing the dividend. They're keeping the dividend at 25 cents a share, so no extra boost there for shareholders. iPhone revenue is shy, 69.1 versus 71. It's just kind of feeling like Microsoft a little bit to me right now, Alex, just straight out of the gate.
Yeah, there's a lot of stuff here that is disappointing, and I think that explains why you're starting to see the stock moderate a little bit. I mean, you highlight the iPhone revenue. The iPhone revenue is a huge miss. I mean, 69.14, you're looking for 71. This is supposed to be the strength of this company. You're looking for service revenue to knock it out of the park. That's the future of this company. It beat, but barely, 26.3 versus the 26.1. Greater China, you talked about, 18.5. It's more than a miss. I mean, it's a huge miss. Misses by 15%. 21.5 is what they were looking for there. So you look here, not a lot to like super celebrate. I mean, maybe the margin story is improving a little bit. That's why you see a beat on EPS. But I wouldn't be surprised, absent some sort of upbeat guidance or conversation to shape how AI is rolling out or something here to moderate. I wouldn't be surprised if the stock heads lower.
Okay, neither would I. I would not be surprised. To me, this feels a little bit like Microsoft, where it's a fine, okay, a stable number, but I don't see how it justifies. How can we have Apple as the most expensive it's ever been, George, and then miss iPhone revenues? Like, what's going on?
Well, so, I'm taking a little bit different take on this. I think we have to look at the services revenue as a percent of total. I think that's important here. Obviously, the iPhone miss is disappointing, but this is a quarter where the sales numbers are always going to be higher because of the fact that the seasonal sales from, the holidays. So as a percent of total sales, the iPhone numbers are going to be higher than their, prior three-quarter averages. I think we have to wait for, at the very least, this is what everyone's waiting for, is the services revenue. Obviously, it's got to show a beat, but what is that as a percent of total revenue? That's what's important here, because that continues to inch higher. That's a higher margin component of the business. We have to consider that. The percent of sales of iPhones relative to total sales has been declining slowly, but it's been picked up by the services. So we're looking for platform services versus product. Right now, the product numbers don't look good. The China numbers obviously are a miss. The estimates were right in line with the average percent of sales for China, which is around 17%. That was a disappointment, around 14% of sales. But right now, the market is trying to hold on to those numbers, absent again some clarity on the services. Platform services component of the business.
Okay. What do you think, Alex?
Well, I think that there's a three-pronged approach to this when you're assessing Apple in 2025, and it's Greater China recovery. Bad, 11% decline. Okay.
Yeah, worse than expected, by the way.
Way worse.
Significantly.
15% miss on expectations.
Hold on, just to hold that thought again here real quick, because that was Robert's whole discussion, is that that's not because China's still like in the lows of their economy. There is evidence that it's starting to firm up a little bit. This is because they're getting undercut by competition here.
Yeah, and I'll leave the experts on that space to provide clarity for that. I'm just telling you, this is probably of the three things that I'm going to mention, this is the third most important piece. Okay. It is the worst of the three, though. The next piece is you needed to see accelerating services growth. You do see that. It needed to be in the low to mid double digits in terms of revenue growth year over year. It is. So this is a good piece of the story, almost 14% year over year growth. It is a smaller percent of the mix than it was last quarter, just because you had the fourth quarter is traditionally, with the holidays, a bigger product quarter. So to George's point, you got to look at that, I think, on an annualized basis, not less so than on a quarter to quarter basis. And then the final one, at the moment, it is still the most important piece of this story is iPhone revenue. And it's not just because it's an iPhone company, it's because we were sold an idea that there was going to be an iPhone supercycle. Not only did they miss the revenues on iPhones, they declined year over year from the fourth quarter of 2023. Okay? There's no iPhone supercycle, or it's some delayed onset cycle.
Yeah. Stock at 237 right now is holding on, but I feel like what I'm hearing here leans a little bit weaker. It would be one thing, George, if Apple were trading where it was a year ago. But it's not even trading where it was a week ago. It's been rallying since Monday, basically nonstop.
Yeah, I mean, I think obviously I'm waiting for the services number. I haven't seen that yet, and I think right now the analysts are probably extrapolating based
services
on the
is 26.3. 23.1 a year ago, 26.3 for this quarter for services billion, obviously.
Okay, so I didn't know that relative to last year, but look, last quarter they printed as a company 11.9% growth in services. So if they come in with that or better, we may see some pickup in the shares. But I will say this, obviously you have to consider the durability of services. It's more smooth when it comes to seasonality trends, macro trends, currency trends. So you're going to see a lot of volatility in the product side of their business. China's certainly a disappointment because 11% down last quarter. It was 0.3% down. So that was that was a disappointment to begin with. But again, what I suggest is going to happen here is that if the services side of their business and maybe how they're going to be bolting on AI demonstrates some increased top line sales estimates. That will trickle down to the bottom line, and there's maybe a possibility inclusive of now the China story being played out. In other words, the story for growth in China had been so bad, maybe it just has anything but better to get better going forward. Is what I'm trying to say.
Okay, that's a fair point, but I just feel that if it were a macro reason for China, then that might be the case. I know there is some macro reason as it's been sluggish there, but Huawei's crushing them right now because people don't feel
it's competition. It is competition. There's no doubt. Yes.
Yeah. No, but I mean, it's a very fair point. So to come back to the services there, because that's so important, the street was looking for 26.1 billion, and they reported 26.3, which is 14%. Alex, I know you mentioned some of that in there. It's just nothing here. Again, that's why I compared to the Microsoft thing, is that it wasn't a horrible number for Microsoft. It was just that it didn't seem to surprise really in any way, and I'm having trouble seeing where the big positive surprise is here.
I look at this, I mean, it's still the same story for both those companies, right? Huge share repurchases, $23.6 billion worth of shares are repurchased. They still sit on $30.2 billion in cash and cash equivalents. I don't see a free cash flow number that hasn't been provided yet, but I mean, the margins are improving. Services continue to be a huge part of the story. But the reason for this rally, allegedly, was for an iPhone supercycle and an AI rollout. The AI rollout has been bungled a little bit, and the supercycle is not showing signs of life. Now, the real reason for margin expansion is the services story that George is talking about. A real reason for Apple optimism 5 years ago was the China story that isn't necessarily holding up the same way. But the most important reason I think that you hold Apple shares, if you do, is because they sit on $30 billion in cash and they buy, $100 billion worth of stock each year. There's a floor that this company can put into its own price just simply because of the amount of money it has. Yeah, I mean that is very true, right? I mean that is kind of like the default case where even if you want to get buried up Apple, it's not really it's a tough buy puts trade. It's if anything maybe a sell calls if you ever want to do it because you do have that backstop of all the shareholder friendly activity. However, they could have put a little extra in their dividend or something, George, to sweeten the deal a little bit this quarter, given how far valuations have run. Kind of surprised they didn't pump some of those numbers up even more.
Yeah, we'll see on their dividend. They did raise, I believe, their dividend last quarter. But, look, I think
Okay.
holistically, just looking at even the chart action, you can see the breakout back in June. I suggest that the reason that occurred is that Apple has really declared they're not going to invest in AI like all the others, like the other Mag 7s. They're essentially going to be bolting on AI applications and offering that within their ecosystem. That's their strategy. That's a cost-effective strategy. So that then allows the company to do shareholder-friendly things like Alex alludes to, buying back shares, dividends, and so forth. That is certainly helping the shares. There's no doubt. You just look at the income statement, you can see the share buyback's been happening for years, and they just continue to rise. So with that said, Apple's strategy may pivot. I think it's going to pivot at some point in time, that they may end up, alleviating some of the pricing power that they have. In other words, they'll start cutting prices or not increasing at the margin the prices that they had in percentage terms in the past, to essentially make it more attractive to purchase their products and then tie people into their ecosystem. I think that's their long-term strategy, and their long-term strategy on AI is use everyone else's technology on their platform.
Okay. Yeah, you're very correct, and I think that is kind of why, to some extent, the market views them not as a pure AI play, right? They have a product that they've tacked on, and I'm telling you, I've talked with people who have iPhones, they don't even know that Apple Intelligence is a thing.
Look, I'm different than most people, I think, but I go out of my way to make sure I don't have it turned on. Just I want my phone to do what it does, which is call people, text people, maybe play some games from time to time. Maybe when the stuff's figured out and it really works, I'll be interested in it. But to me, the big story is we're not talking about an Apple that's trading in the 20s on a forward earnings basis. We're talking about one that's trading in the 30s. There's enough here that makes you question the narrative that I personally look at this, and I would not be surprised if it's more likely this stock opens up at 230 than at 245 tomorrow.
Okay. I'm with you on that, and it seems like maybe we are talking it down a little bit. It's at 236 right now, which is just a slight little dip, but we'll see how it trades. Give it some time to marinate. It's a very good first look at analysis. Thanks, George Tsilis. Thanks, Alex Coffey. Nice